Can the rally survive without the tech trade? Well, let's bring in Northwestern Mutual Wealth Management CIO Brent Schutte and Capital Area Planning Group Managing Partner and CNBC contributor Malcolm Ethridge. It's great to have you both here. And Brent, I will kick off this conversation with you because as we started this hour, Mike Santoli laid out how poor breath has been here as mega-cap tech has continued to lead the charge. Is that just the way we need to think about this market and how to be invested in this market at this point?
No, I think the market's going to broaden out because the economy is going to broaden back out. And so if you think about the past couple of years, the economy has been heavily bifurcated. So manufacturing, housing, small cap companies, lower income consumers, things that are harmed by rising rates have been harmed in the market. Compare and contrast that to the higher income consumer, which has a wealth effect going on, and the secular AI theme. And that's where you've seen a really narrow market for the past 2 years. In fact, it's the narrowest 2 years since 1998, 1999, when you had a similar backdrop. If AI does become what the analysts before were talking about in moving into the real economy, that's where I think you see the market broaden out into things like small caps, which are actually seeing rising earning estimates. And that's where I think lower rates possibly will help. And that's where I would expect people to remain diversified, because I do think you will move from a narrow market to one that is much more broad in the future, if history is any guide.
Malcolm, we have a growing list of strategists and analysts who think we're going to hit 7,000 on the S&P before year end. Are you one of those bulls?
I think it's very possible. I think considering what we're hearing right now and all the excitement that has ramped up over the last couple of weeks from all the deals OpenAI was striking, now you couple that with the day that NVIDIA has been having, and now we're finally about to get earnings from the most important 5 companies probably in all of the S&P over the next couple of days. I think that really could be the catalyst that pushes us across that mark before the year is over. And I really think that that AI narrative will continue for another couple of years now, especially if you take Jensen's timeline of 6 quarters, he called it, them showing that kind of revenue growth from just one product is indicative, I think, of the entire industry and the entire AI narrative continuing to carry.
Brent, I'm looking at your notes here, and you talk about the fact that there's less concern than you can really ever remember in your career about what appears to be a weakening and slowing labor market. What is the data that you are watching right now, and how much of a concern is this as we talk about a broadening market amid a broadening economy?
Yeah, that's where I think the broadening occurs regardless of longer term. I guess the question is, do you have a hiccup between now and then? And the labor market when we had jobs reports, was down to a 27,000 average pace. And I know people talk about immigration, but that doesn't explain why the labor differential in the Conference Board, for example, people are suggesting jobs are harder to find. If you look at the University of Michigan survey, the people worried about more unemployment in the future is at levels that it hasn't been before without a possible contraction. And that's where I just think we kind of create these narratives on Wall Street about things continuing forever and when not to worry about things. And I think just right now, when you've seen this narrowing of the labor market, for example, less than half the industries have been hiring the last 4 months when we had jobs reports in that labor market report. That's where I think people need to be just a bit concerned right now about what is happening in that labor market, and does that filter into the broader economy and cause some sort of a pullback in the future.
Malcolm, I'll put the same question to you, especially since we did get that announcement about job cuts at Amazon today, which are historic by that company's standards.
Yeah, I think 2 things. I think all of the tech companies that have been reporting layoffs, Microsoft, Amazon, et al., they're all trying to get to the productivity numbers that NVIDIA posts, right? Roughly $4 million per full-time employee is the metric on NVIDIA's workforce, and all of the other tech companies that are in that same Mag 7 category are chasing that number. And so that's not surprising that we're seeing that level of layoff, especially as they incorporate AI into a lot of their different workflows. They're basically messaging to their employees, figure out how to incorporate AI, focus on the thing that you do best and leave the rest alone. But I think, to Brent's point, a lot of what we're going to see is a year from now, 2 years from now, just a retooling of what America's workforce looks like. So yes, initially the knee-jerk reaction is let's lay off, let's scale back on hiring until we know exactly what our growth plan looks like. But I think what you're likely to see over the next year or two is companies starting to have that broadening effect that Brent mentioned, simply because now we need to hire a different type of worker. We don't need to just hire the worker that was doing the job that AI replaced. We need to now hire the worker that knows how to come alongside that robot and actually guide it in doing its job.